Computer. Oh,
There you
well,
go.
there you go.
I was gonna say, Gordon, for someone to make a video like that, they must be getting a lot of phone calls from angry clients, and that means that we're doing our job and we're educating people. And one of the things that I found out, like when you call those lines, a lot of times they're not very transparent. So that was very transparent. Who knows how long she's going to keep her job because the insurance company that she's working with probably does not appreciate her going on TikTok and kind of exposing
I'm
what.
going over there with Tony, but I just wanted to say that we did this call with Jennifer this week, and she's on right here. And
Yeah.
we had this call with the company and had the information. And the person was actually pretty nice that we talked to. They gave us a good amount of information, but this is we need to be doing this. Like all of us should be doing this once a week, calling companies and getting people this information.
No question. Yeah, somebody
Um,
asked in the chat what company.
Yeah,
Oh,
is
your
this?
company. Well, hang tight. You're at the training,
Well,
so
you might supposed to be in an overview. What's your name? iPhone.
yeah, they might need to be in the business overview if they don't know if
Okay.
I don't
Tell
know who
them,
invited them or what.
have them go over there, and I'm going to the business overview. Tony's calling me. I need to be in there.
Lewis or Louis? Yeah. So have
Yeah, yeah, he should be with me.
okay,
Lewis, go with me. Lewis, go to the overview.
breakout room, and then you'll learn everything over there.
Hector,
Yes.
I don't think it's that long that people could not hear it again, and this time it will be recorded in the front end of this recording. I don't know what the rest of you guys think,
I
but
agree with that.
so
I think that's a good
even
idea.
if
But
you
I got to go
play
to the
it back
breakout
one
room.
more
So you,
time,
it's
You want to
on
play
the
again?
All
it's
right,
on the
Matt. See you,
leaders
bud.
chat. If you scroll up a little bit, Hector, you can share it. I got to go to the room though, because Tony
Gotcha,
can't
gotcha.
share.
Okay, let me pull
Right.
it up.
We got a
We
lot of
post,
content to cover this morning, guys. You're going to be
yeah.
powered here in the
You
next
want me to
45 minutes.
you want me to skip that, or do you want to play it real quick?
play
Or
it again, please.
You
okay,
can play it.
let
Play
me
it.
let me scroll back up because I know where it was it posted on the Dream Chasers?
Yes, it was.
Okay, give me one second. Oh man, when you're looking for something, can't find it.
Yeah, I didn't have it up
Yeah, yeah.
for
I'm
that.
gonna have to skip it. But we will certainly
It said
actually.
Dream Chasers leaders, right?
Oh, that one. Okay, so I was looking at the normal one.
Javon Stewart,
Yep. Okay, I
252.
got, I got, I got, I got. Okay, let me share my screen. So for those of you who just hopped on, we're going to share a quick TikTok video that Jay shared with us. Here we
We got a
go.
lot of stuff to cover that's maybe as good, if not better. So let's go, go, go.
Okay, gotcha.
So right now, my company's like having a little mini freak out. So they sent us like a mass email saying that if financial advisors call in along with the policy owner and they're asking a slew of questions like how much cash value does the policy have? Well, what happens to the cash value? Were you told that this happens when the policy expires and why does the policy expire? Like they ask all those questions. They're basically telling us to gauge the question, don't make the company look bad, and answer it to the best of the knowledge and the workflows that you have. Because we're getting a lot of calls where people are feeling like they're being scammed out of their life policies. And I'm going to be honest with you. When it comes to your life insurance and you have cash value is what we take out of your premium, a small percentage, we set it aside. You can borrow against it. If you have a universal life policy, you can do a withdrawal, whatever. And when people die, they think that the cash value is going to go to the beneficiary. That's not true. How do you think these companies make money? They make money by doing those types of things, having interest, build on money, having cash value that you're never going to get back. That cash value does not go to the beneficiary. That cash value goes to the company. So if you paid into the policy and you have at least $25,000 in cash value saved into the policy, when you die, nobody's going to get that. The company's going to get it. It's going to stay with the company. If you took out a loan on your policy and you pass away and you did not pay that loan back, that loan amount's going to come out of the death benefit. That's supposed to go to your family. So you can minus that from the death benefit. I'm not saying life insurance is a scam. I'm not saying it isn't, and I'm not saying it is. But what I am saying is that please be merciful on representatives and customer service agents and claims examiners and persons like myself who are taking time out to answer the calls, because we only can be we can only tell what the company's allowing us to tell. At the end of the day, we still need our job. We are not trying to lie to you. We're not trying to, but we can only give out but so much information. And that's we only have a certain level of power. And believe me, supervisors do not want to take the call. Oh, get me to a supervisor. They don't want it. They're going to flame us about why they're getting the call and say, well, tell them this, tell them that. They're going to do everything they can not to take that call. All right. I don't mind telling the truth. I don't mind saying, yeah, your policy is not going to pay out for this. It's not going to pay out for that. If it's a homicide, more likely it's not. If it's an unaliving of yourself, it's probably not going to pay out for that. It's not going to pay out for cash value. You're dumping money into this policy. And as you age, your policy is going to more than likely terminate early because you're getting older and your policy is not designed to outlive you. Just be merciful on the representative.
They don't want the shade, huh?
You got the PowerPoint ready?
Wow.
I do.
You put that on TikTok?
Yeah. That was on TikTok. Was that the first time I seen that?
Yeah, she probably.
She I don't know. They won't be happy with her. All right, so today is going to be like one of the most important things. So we're going to cover the Crusade, and this is just something for you guys. This is really one of the things that I get really passionate about because the insurance companies and these financial companies out there, they're crazy. They're very greedy. And then once you know why we came into business, then you know why, like Gordon was mentioning, why we've grown so much, right? Let's start with what is a crusade? Crusade is used to describe campaigns against injustice and poverty. A crusader comes from crusade, which meant campaign against public evil. Definitions of crusader: a disputant who advocates reform. Okay. Here's another, let's see what this is, from the A.L. Williams book. It says the first steps to building a winning team is building crusaders.
Was that a video that you skipped?
I think it was at like 19, like something 19, like the ad that they had.
Oh yeah.
You guys want to see that?
Because it's old doesn't mean it's bad.
True.
The Great Term War of 1977 to 1990 was filled with many bitter battles, changing the life insurance industry forever. Met with stiff resistance from the enemy, the 225,000-strong A.L. Williams Army answered the challenge. However, nothing was left to chance. Every ALW agent knew what he or she had to do. Every operation was rehearsed in advance. Daily, they left their homes and headed into battle. Delivering heavy blows at enemy targets week after week and year after year, 80,000 whole-life agents were killed or captured. With the ingenuity and determination of the ALW Army, 95% of life insurance companies were destroyed. In one of the most decisive battles ever in the history of war, 41 million cash value life insurance policies were annihilated. The whole life industry lost countless agents, companies, policies, and customers, thus sealing their fate forever. How could that happen?
That was actual footage from the term insurance
From the war.
Yeah, there you
We're still in a battle, man.
go. We are for sure. It reminds me of one of those 1930s news broadcasts. So building crusaders, the first step, is to building a team is building crusaders. How to build crusaders: sell the A.L. Williams concept first, buy term, invest the difference, right? That's what we're about. Show the wrong done by the traditional industry. Despite us being in business for so long and us, harping on the crusade, I mean, more policies put in force today are still cash value policies and term insurance policies, believe it or not. Show people the good they can do by being with A.O. Williams, correcting that injustice, and why you should build crusaders. There's a saying that says crusaders die hard, right? It's more. This is more than just about the money. Okay, for once you understand what we do, like one of the things I tell people is like, yeah, like I could make more money by selling drugs, but I'm not going to do that. It's not just about the money. It's about doing something that's right, right? And we know that what we're doing is right.
Yeah.
That's what I tell people whenever they tell me, why don't you go sell whole life and cash value insurance because you can make so much more money? Yeah, sure, but I have to be able to sleep and look at myself in the mirror at night. Okay. Now I didn't know this, but this goes way, 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 way back. You can see the date over here in the top left-hand corner, 1877. I mean, the insurance industry, they've been around for a very long time. And what you're looking at right there, these are like resources and books and pamphlets that go back all the way to 1877 about the life insurance industry, how it works, the evils of it. So 1977 all the way through 77, and then all the way through to 2013. You see all that? I mean, there's
Yeah.
so if you want to get really good at our business, I'm not saying read all those books, but I'm saying look up some of these books. We're going to go over a couple of some of these, right? And start reading this stuff so you understand uh, how deep it goes. Okay, and it's not something that you have to believe because we're telling you you can actually read some of this stuff about how your life insurance policies work. Okay. And here's one of them. It says how your life insurance policies rob you. Looks like an older book, like maybe from the 1970s or 1980s. Milton. And what I would do if I were you, I would jot down some of these, right? Look that up. Maybe you can go to your library. You can pick up one of these books. The Mortality Merchants, the legalized racket of life insurance, and what you can do about it. Scott Reynolds. Have any of you guys read any of those books? Yeah, Gordon, yes.
Yeah.
Awesome. They get into details, I'm sure, that the insurance companies don't want you to know.
You don't even need to read the whole book, but yeah, you can read pieces of it. And we're going to go through some of these today, but yes.
Here's another one. It says The Invisible Bankers, everything the insurance industry never wanted you to know. I think this talks a lot about like universal life insurance and just whole life insurance in general. And then stop wasting your insurance dollars. So jot down all of these books. We're going to get into some more details about some of the stuff that went on in Congress back in the day, and some of the studies and things that they found out about, and warnings that they gave the public about investing your money in insurance policies. So you want to take it from
Yeah,
next?
I can do that. You want to just keep your piece up? Yeah. The life insurance, the great national consumer dilemma, and you got life insurance, still the great national consumer dilemma. More publications. We can keep going. There's some excerpts that are going to come out. The Insurance Trap, Unfair at Any Rate, Herbert Denberg, Shopper's Guide to Canadian Life Insurance Policies and Prices, 1987 edition. How Not to Get Ripped Off. I think that's interesting because if you think about it, are there books and articles written about auto insurance? How not to get ripped off? Not really. It's just it's the only industry where they've really confused the crap out of the consumer. They've just confusion is everything. Term insurance explained, why you shouldn't mix savings with life insurance, the truth about life insurance, dividends, the use of a computer. Anyway, so on and on and on. There's so much overwhelming evidence. If you want to click, Insurance Department of New Jersey. And I think this highlights it. Do you click again? Does it give you an animation or no?
No, it doesn't. It just goes to the
It
next
does not. Okay, we'll go back to that. But what's it say? Facts every consumer should know, not from an insurance company, but from the New Jersey State Insurance Department.
Mm-hmm.
And underneath that on the left, it says probably the least expensive of all life insurance based on a rate per 1,000 is level term. Wow. At age 25 or even age 35, the savings difference between term and other forms of life insurance is substantial. What the New Jersey Insurance Department has to say about life insurance. Not everybody needs it. Many people with grown families or no survivors could do without it, right? Term is the no frills way to do it. So, and it's on to say, if you want to, we could spend the whole meeting reading this, as investments go, whole life policies are not the best for many people. So many things, universal life, because it's a more complex form of insurance. It's even more important to beware of the hard sell and become an educated consumer. This is the New Jersey Department of Insurance. Okay. All right. Salespeople can be motivated by high commissions, bottom right. So, guys, I mean, this is just warning after warning. Quick reference guide, The Games and Scams of Cash Value Life Insurance. I love this book. Now, some of these books you can't even find. You can search them. They're not in print anymore. What's Wrong with Your Life Insurance, Norman Dacey? Because the reality is you don't have people out there wanting to read these.
Right.
It's not fiction. It's not fun. This is like grueling stuff. So then and since we also don't want to think about our mortality, Hector, nobody does the research. They listen to the guy that comes in and sells it to them. So they usually end up being sold the crap. So let's go to the next one.
Yeah, like they listen to the TikToks.
Yeah. Maybe play. This is good. This is old, I know, but this is still facts. This is Phil Donahue. But
I
it's
heard the
good.
name. I heard the name.
You never even heard of the dude. Or you never seen a show. But anyway, let's watch it. It's good.
Oh, wait a minute. That's weird. It keeps.
Yeah, you gotta.
You got to feel a little bad about that.
A little.
I mean, it's an important issue. You have
Right.
children,
2.
all right, in this age of inflation and diminishing work opportunities, all those things. His life insurance policy is going to become, after the grief, the number one feature of your life. And you don't know how much you're going to get, if anything.
Uninformed.
Yeah.
Yeah.
Well, you're dismissed. I'm sorry. We can't. All right. I think what's important about what you said is that there are millions of people who could say the same thing. Isn't it a shame?
It makes me feel a little bit better.
Yeah. How about you? Help me.
I had to take out more insurance since I passed 40. Why, I don't know.
Who obliged you to do that?
Our insurance agent.
He wears a uniform, does he, and a badge?
He didn't explain it to me, though, why I had to do
Do you
it.
know what? Do you know the difference between whole life and term insurance?
No.
Do you? Can you explain? Okay, hang on just a minute. Whoa, we got a PhD audience here. What's the difference? You want to stand, please?
Okay. Whole life insurance is a policy that carries through for your whole life. Term insurance is something that you take and it decreases as the time goes on. You take it out for...
Does term insurance have to decrease?
The price of it doesn't increase. You pay the same premium from year to year.
Yeah, but is the face value of the policy, does it have to diminish?
That I don't know.
Which is the better of the two policies in your view?
I would say the whole life.
Yeah, because...
Well, because at the end of the time, you're going to get back all that you put into it, plus dividends. At the end of the term, if you're still living, you don't get anything back.
Right. Do you know what?
What?
Today's guest is really going to disagree with you. But that's all right. We're all here to learn. And it doesn't necessarily... Listen, this is complicated. A lot of people share your view, and I want to talk about it, so don't leave me, all right? Norman Dacey, an estate planner from Connecticut, a man who has been under a burr under the saddle of the insurance business for a long time. You are foursquare in favor of term insurance, and in fact, you won't even go near a whole life policy, will you? Tell me why.
Oh, why?
You'd have to watch the whole.
Wow.
Yeah, take it over, Hector.
But he is the author of that book.
What's Wrong with Your Life
What's Wrong
Insurance?
with Your Life Insurance? Yeah.
Yeah, I have that.
Sometime in the 80s, looks like. Houston Law Review. Conclusion. Recommendations. This is back from 1969. It says the cases demonstrated that where the needs of an insured are not met by the insurance agent under a duty, the agent will be held liable for all, is that approximately caused damages. Thus, where an individual who lacks the insurance knowledge, which is most people, to make an independent decision and who is obviously in need of large amounts of pure insurance protection is sold a low insurance, high cash value policy by an insurance salesman in a fiduciary capacity, and death occurs, the agent should be held liable for the difference between the amount of pure insurance the premium would have purchased and the face amount of the policy. So what they're saying is that they were suggesting, right, back in 1969, that if you're an agent and you recommended a cash value policy that covered maybe like 50,000, and that could have gotten the client 300,000, and the person dies, then the agent should be held liable for that difference, right? That $300,000 difference. Imagine if that actually went into
Yeah.
into law. That would have, you know, discouraged a lot of people
Crush
from
that
going.
industry.
Yeah, it would have crushed it. But I can only imagine the kind of pressure that lobbyists put on politicians and all the money that was probably thrown their way for them to look the other way. And I was looking at something about how people make decisions about complicated subjects like politics. Like most people, they don't really research, they don't really do any in-depth study about, how is this going to affect me down the road? And it's really more about feelings. So a lot of times when I talk to clients, they're just parroting stuff that they saw on TikTok. They're just parroting stuff that they saw on Instagram. Okay, so we have to be really good about understanding how these policies work so that we're very knowledgeable. Okay, and show them some of these resources and like highlight it. So this is the life insurance industry. These are some hearings in Congress, and this was back in 1973. And these are some of the highlights from this hearing. Take a look at this. It says this was 2,216 pages. Okay, who's going to read 2,216 pages?
Nobody.
Nope, ain't nobody got time for that, right? People are busy. But here's some of the highlights. It says we have presented the highlights only, and some recommendations. And look what it says over here. It says, let me see. Over here. So, permit me a brief opening statement. More than 300,000 times a day, all year long, American consumers pay a bill without having more than a somewhat vague idea of what they're buying, which is true, right? And then it goes on. These 140 million customers are at an outlay of 23 billion a year in buying life insurance policies,
Mm,
and it's more now. There's a lot,
yeah.
there's a lot more of this now. Um, some of you guys remember Ralph Nader. I think he
Yep.
ran for president, I think, back in the day. And so chairman, I'll skip that part. But for almost 70 years, the life insurance industry has been a smug, sacred cow feeding the public a steady line of sacred bull. Very, very direct. Failure to protect its ultimate consumer, the widow's study. Let's see. So buyers are told in the typical sales presentation that if they buy term insurance, they'll have nothing left when the policy expires. The pitch is to the husband's ego rather rather than the wife and children's needs. The husband is extorted to buy living values. Does that sound familiar? Rather than death protection. If he buys a cash value policy, he is told he can get most or all of the money he pays in premiums back through increasing cash values in so-called dividends, which are in fact refunds of overcharge. Right? They try to sell this like an investment, right? We know that true dividends is this is a kind of in insurance, it's a return of overpayment. In an investment, it's they're sharing part of the profits back with you. So it's not the same thing. That's kind of getting into the weeds. So let's see. So the motto of the Pennsylvania Insurance Department is the public has been screwed long enough. And then Congress shall pass a law making cash value illegal.
Should. Yep.
They should. This is back in 1973. So nothing new. Conclusion is that one, right? They should make this illegal. Gordon?
Yeah. Federal Trade Commission 79, life insurance cost disclosures. You can click that. Um, And it says consumers losing billions yearly by ill-informed and inappropriate life insurance choices, FTC staff says. In making the report public today in testimony before the Senate subcommittee, FTC Chairman Michael Puchik said that while Americans spend more than $30 billion annually on life insurance premium payments, the average consumer buys a life insurance policy without ever being given the information that is absolutely essential for him or her to be able to understand what the policy really costs. Indeed, I think it is fair to say that no other product in our economy that is purchased by so many people for so much money is bought with so little understanding of its actual or comparative value. Guys, that creates an opportunity. If you understand and can grasp what we're going over, you can click that one. And this is consumer protection. Good little video.
Insurance is the most basic, life insurance. 86% of all American families own some form of it. The total amount they are insured for is almost incomprehensible. $3,541 billion. Life insurance is a good example of what the industry is built on. Our fear of the future, our search for protection. It is also a good example of what critics find wrong with the industry. They say the insurance business took a simple idea and made it complicated, then exploited the complexity to make a buck. There are basically two kinds of life insurance, term and whole life. In term policies, all of the premium dollar goes for death protection. Premiums are low, especially for young people, but increase as the purchasers grow older. Whole life is very different. Premiums start much higher but remain constant. Part of the premium goes for death protection, and part of it is put aside. A cash value, a form of savings that can be borrowed against or withdrawn. The big issue in whole life concerns this cash value. Whether it might not make more sense to buy the less costly term insurance for death protection and invest the difference elsewhere. That issue heated up when the Federal Trade Commission here in Washington released this study in 1979, indicating that most people with whole life policies were taking a financial beating. The FTC figured out the rate of return on whole life policies. That is, how fast their cash value was building up. Almost no insurance company will tell you what your rate of return is, and this FTC study may explain their silence, because it found that the average rate of return for all whole life policies in force in 1977 was 1.3%. 1.3%, at a time when other investments were offering many times that return. Michael Perchuk was FTC chairman when the report came out. He says the industry's refusal to disclose rates of return makes it impossible for consumers to shop around.
The FTC set out to find out whether people understand what they're getting and whether they're able to compare, not only compare between different life insurance policies, but compare life insurance as an investment as compared with, say, putting the money in a savings bank or investing in the stock market. They cannot make that determination because there's no uniform way of disclosing the effective annual interest return on that investment.
But Robert Frolke, president of the American Council of Life Insurance, says that's not important because whole life must be judged as an insurance policy, not as an investment.
It does have certain characteristics of an investment, but I wouldn't want to call it an investment because then very properly you should compare the return of an investment with the return on life insurance, and that comparison isn't wise, nor is it fair, because life insurance primarily offers protection and the investment feature does not offer protection. So we would be, it's an apple and orange comparison.
And the problem is that most people have no idea of the rate of return on that investment in savings. No idea. And although efforts have been made for years to try and get that information to people, those efforts have been effectively blocked by the life insurance industry itself.
On purpose?
On purpose, yes, of course.
Why?
Because competition, which is what we rely upon in most marketplaces to keep prices down, works only when consumers have the information they need to make informed choices.
The insurance industry is prohibiting the consumer from finding out what the relative rates of return are, so I can compare this policy to that, which is certainly one important factor.
But there are also unknowns, dividends, that do affect it, that are unknown at the time the purchase is made. Now,
But there's certain things that are known. Why not let me know about those?
because that is just a part of the whole, and it would be...
I repeat, why not let me know about that part?
Because it really isn't too helpful if you don't have the whole picture.
Well, maybe it isn't helpful to you. Maybe it's helpful to me.
To the extent that it's helpful to you, you have it in your policy, but...
the rate of return is in my policy?
We have those things we know. The amount of premium, the cash value. Those are the knowns.
But the rate of return, in terms of just of the cash value, is not in my policy, is it?
No, but you can very easily figure it out if you want to, but we again urge that it's a more complicated subject than that, and there are unknowns that at the time the policy is issued, we don't know.
So you're really doing the consumer a favor?
That's our belief. We're trying to give him all of the facts that we have available, and in the process also not mislead him.
That sounds like a agent confrontation kind of conversation. Where you're like grilling the guy and he's like going in circles, muddying the field.
Man, is it a mess? You want to go to the next one, man? That's just amazing stuff. But this is true today. This is the McCarran-Ferguson Act, and also known as public law, United States federal law that exempts the business of insurance from most federal regulation, including federal antitrust laws to a limited extent. So now you want to know, why is it we stopped this investigation on the insurance industry? Well, the McCarran-Ferguson Act protected them. It moved it back to the states. The states now regulate the insurance industry. And so all of this stuff that was spinning around and went to the Senate subcommittee, and they said should be illegal. Then they said, well, we're going to break it up into states. And what that did is it protected a very rich industry with deep pockets, lobbying money, politician pockets, businesses. And, you can't run an ad. I mean, if you did this story, investigative journalism today on 60 Minutes or something like that, the deep pockets of the insurance guys would be raising Cain. They would be trying to shut down all the advertisers for 60 Minutes. 60 Minutes couldn't survive. So, and it's trillions and trillions of dollars. So this is the 79th Congress, and Supreme Court ruled United States, the federal government could regulate insurance companies under the authority of Commerce. The act was sponsored by, enacted, became a law, repealed, not a law anymore, boycotted by the insurance industry, reenacted, passed again, back into law. You go to the next one.
So back into law as like they can regulate them now?
Well, let's see. What's the next slide say? I think does it give us an update? No, it doesn't. It goes back. So let's go back and just look at that real quick, because you're saying, hey, what does that mean? Was passed.
As far as it was passed, like we can regulate the insurance.
Yeah.
Sounds like.
Boycotted, reenacted, enacted, became a law.
Yeah, it doesn't give us any more.
The federal government could regulate insurance companies under the authority of the Commerce Clause in the U.S. Constitution. The act was sponsored by Senators Pat McCarran, Ferguson, also known as public law. Well, the law says that exempts the business of insurance from most federal regulation, including federal antitrust laws to a limited extent.
I see. Okay.
So that's what the law is. The law exempts the business of insurance from most federal regulation.
So in 1945, they're exempted. Then they're not exempted.
That's correct.
And then at the end, they're like, okay, they are exempted in 1970. Yes. We cannot regulate you guys.
That is a little confusing when you read that page. I see what you're saying, but that's the reality. The law says they're exempt. So now it's reenacted. They've reenacted, brought it back in 79, and it hasn't been touched since.
So what happened? What happened in the Senate? They made a statement that they can never investigate the insurance industry again unless they have 100%, 100 senators.
All the senators have to be on board. Well, that ain't going to happen. Shit, they can't agree on anything. Anyway, all right. What do we got, man? So what do? We teach. Buy the right kind of life insurance. Here's a publication from our company, 3 nevers. Nevers of buying life insurance. You want to read those, Hector?
Never buy any kind of cash value or whole life insurance, including universal life. Never buy insurance as an investment. And never buy a life insurance policy that pays dividends.
That's pretty clear, man.
Very clear.
There's some good ones coming up. I don't know if we can get, yeah, we got some time. Let's roll because this is going to help us, I think, close the month too.
Back in 1993, Primerica, I guess they were featured in July 1993 Consumer Reports, a whole thing about Primerica and how we're the king of term insurance.
Yep. A.L. Williams, the beginnings. Yep.
A little bit more about, life insurance. Did your agent lie to you? Consumer Reports back in uh,
'93.
August 1993.
Yeah.
Yeah. Let me see if I can.
Those don't jump. If you want term insurance, it's best to stick with pure term. To make their policies appear more attractive and to give their agents something to talk about. Some insurance attach various enhancements to their policies. They're all a bunch of garbage.
Yeah. So we were popular in Consumer Reports back in 93, it looks like. Brand name ratings, I think that's nothing to do with life insurance, but should you buy a whole life policy?
Yeah,
Right.
there's all kinds of these little excerpts on the right. Tricks of the trade. The amount of the loan plus unpaid interest is deducted from your death benefit. For decades, insurance companies have pushed whole life. It's still a poor buy for most people.
Yeah.
My whole family had whole life insurance. That's all we had.
That's all they knew.
Yeah.
That's all I had.
So this is from United States Senate back in 1992. This is another hearing. And let's read that. I think we can all agree that buying life insurance is confusing and frustrating, but I'm convinced that it doesn't have to be that way. Too many companies in this industry would rather confuse consumers than educate them. Very true. Maybe that is because a confused consumer won't ask so many tough questions. What do you guys think about that?
Yeah.
Like, are there any policy cancellation charges and how much are they? Today, life insurance shell games are quite sophisticated. Companies and their agents disguise the true cost and true value of a policy by using slick computer-generated illustrations of how much a policy will cost and how much it will be worth. That kind of takes me back to the interview that the insurance guy, right? We can't tell you. There's so many unknowns. They hide exorbitant administrative fees and policy surrender charges. But that's not all. These same companies design and market so-called new and improved life insurance policies to lure consumers into replacing their current policies. What consumers don't know and are never told is that the real purpose of the new policies is to generate higher fees for the companies and new commissions for their agents. So this is directly from the United States Senate back in 1992.
They get a raw deal, it says at the end. The consumer gets a raw deal.
Yeah. And this is a Senator Howard Metzenbaum of Ohio, also 1993. Let me see. So that hearing explored a question that has been around for a long time. Do buyers of life insurance understand what they are being sold? Industry trade journalists have repeatedly determined the lack of consumer disclosure and the abuse of unfounded projections in the life insurance business. So it goes on and on, right? I mean, they're basically exposing what's going on, and they're warning the consumer about all of these unethical practices by the life insurance industry, right? You see it going back all the way to from 1877, all the way through today. The mysteries of life insurance. You want to take that one?
Yeah, Consumer Reports 98. And, just Consumer Reports has long recommended term insurance as the sensible choice for most insurance buyers. With term, you only pay for the protection you need and just the length of time dependents or financially vulnerable. More competition has lowered premiums. Policies offering $250,000 worth of protection that cost $600 a year. 7 years ago, it cost about $300 or $275 a year today. So term insurance is the way to go, according to Consumer Reports, and then they're for the consumer. Let's see what else.
And that was back in 1998.
98. Who needs whole life? These policies often cost too much for too little protection. Since 95, life insurance companies, including John Hand in your pocket, Metropolitan Life, Prudential, and Transamerica Occidental have agreed to pay billions of dollars in fines and restitution to policyholders who were churned. But many more companies are expected to be the targets of state and civil actions. A Prudential spokesperson insists that abusive sales practices are problems of the past. But Keith Van Doren, a Florida Assistant Attorney General, calls industry sales practices an ongoing fraud committed against an unwary public. 98. What else?
On the Maryland,
we got a warning. That's right.
Yeah, there's a warning about the universal life. This is current, right? So
yeah, we didn't pull that up.
We is a problem of the past, supposedly back in 1998, and still today there's warnings from Maryland Insurance Department about the universal.
Susie Orman, what does she say? She's a financial advocate. I have a top 10 hate list of investments that I hate. I hate them because they do absolutely nothing for you, and they do everything, in my opinion, for the financial salesperson that sold them to you. And universal life, variable life, and whole life are at the top of my top 10 hate list. Imagine that. I think Dave Ramsey's another one. Third-party advocate Dave Ramsey, what does he say?
It
doesn't say it there.
There's a quote there.
Yeah, not a quote. He hates it.
But a lot of the same.
Yeah. He's got so many recordings. Cash value versus term. This is a good slide, and it's a little fill in, but the product is a bundled product.
Gordon, can you just go ahead and mention for everybody that's on here, because some of the people are new, Dave Ramsey's background?
Yeah, Dave Ramsey was in a partnership with a guy named Roy Matlock years ago. They started a radio show in Tennessee, and he was actually in our business for many years, worked with A.L. Williams, learned about the buy term and invest the difference crusade, made a lot of mistakes in his early career financially and just overextended. And then he really just dug in on teaching people the right way to win the money game. And so he's built a career off this radio show and education about personal finance.
Stuff that he learned a lot of it here. Yeah.
Learned it with us. Yes. What is this cash value versus term? If you click on this is a little walkthrough, but each slide each one will give you the cost of insurance. If you look at the premiums that go in, if you click next, what happens to the premium? Well, number one, it goes to the cost of insurance. Click that again.
Oh, gotcha. Okay.
And then click it again, and then the company expenses gets the next piece. Then you get the premium taxes, and then you get the agent commissions. So the 1 through 4, where's the money going? It's going through all these things. Then it finally goes into the cash value after the cost of insurance, after the company expenses, after the premium taxes, after the agent commissions. Well, then what about that cash value? If you click the next one, low rate of return. They just said historically it's like 1.2% on average. That's still true today. The cost to borrow your money out now is the next thing. And they do say in there, because people will say, well, I'm going to argue with you on that 1.2 because it shows in my policy that it's going to guarantee me 4 or 5%, but it doesn't explain the first 3 and 4 years where you have nothing in there. So that's why it's an average 1.2. It's because it takes 3 to 4 years later before they'll give you the 4%, Hector, and then they're going to charge you 5 and 6%. They're going to charge you to borrow your own money and tell you it's a great advantage. Does not qualify as an IRA. You're right. It's not a qualified account, and you're way better in an IRA. And number 4 is you lose your cash value when you die. Just like the lady started out with TikTok, it ain't yours. So when you die, we just say, do 2 different things: insurance and investments. Keep them separate. Man. 3 kinds of insurance, 3 kinds of term. Annual renewable term. That means just the price goes up, protection stays the same. It's when you need a lot of coverage today, and maybe you don't need it for a long period of time. And then you got decreasing term. That's what's sold still today. All of these are sold today. ART is sold a lot of times by the insurance industry to get you to buy whole life later on, because they scare you. The decreasing term is mortgage insurance almost exclusively. So when you're talking to people and you're sitting with them, find out if they're paying for mortgage insurance through their mortgage. A lot of people are, and you don't ever find out if you don't ask. And all that means is you're paying the same price, but the amount of insurance is decreasing. So you have a decreasing term policy. All right. And then you got level term. That's what we believe in. You lock it in at this price, lock it in at this protection, and it goes for the period of time that your beneficiaries are in the earlier stories, your widows, your orphans, the people around you. If they need your income, that's what it goes to. Okay. Permanent guaranteed renewable level term. That's our whole focus, has been for years, from A.L. Williams to Primerica. We do precision term, power term, built in an industry leading value, totally unique underwriting system, identity authentication feature, seamless banking information is important. Real-time decisions could be within minutes, completely tailored to one's needs, different amounts of different periods of time. We go up to 35 when the industry will not. Product recommendations made exclusively by the financial needs analysis, marketed exclusively by us, all based on the need, not on some fabricated baloney. It's just the need. Why? Multiple needs, multiple periods of time. Simple, man. Keep it simple. Precision and Primerica and Power Term, the two most, they're awesome products, guys.
Yeah. Yeah. Very
Awesome
competitive.
product. Very competitive. The 4 fundamental beliefs. A life insurance company will never give you something for nothing.
Right.
With cash value life insurance, you pay for 3 things. You only get one.
Mm-hmm.
There's never been a third-party article written recommending cash value life insurance. Now, I've seen them written by the salesman. I had a guy one time had a book published, and he was part of the authors, and I sat with him in Baltimore. But I'm like, dude, you sell the crap.
Yeah.
And you had to self-publish this book and print it, because you can self-publish books. People with average intelligence and above will always do business with you. So remember that. If they have above average intelligence, they're going to say, dang, there's somebody in this business that's logical. I like you. Take it away.
And this is a little bit more from Norman
Dacey. This is the
Dacey
at the end of the book.
At the end, okay. So,
are you familiar with this?
This book, yes.
Are you familiar with this excerpt at the end?
No.
Can I? Let me just share this. Man, this is powerful. He says in here, "I'm sorry I had to write this book, and I'm sure it'll pain you deeply and great many friends of mine in the life insurance industry. And I'm confident, though, that any reader not personally identified with the industry will agree with the facts I've reported do exist, that they should not remain hidden. Like a pan with many tiny links, none important by itself, but which nevertheless collectively drain the content, so does life insurance, with an inequity here and an advantage taken there, drain the financial security of the American people. Guys, where now will the American people find a champion willing to enable to harness the strength of this financial giant? Who will lay the present sorry mess open to the light of day? Where shall we find a man with the temerity to face this latter-day untouchables, to stand in the path of this juggernaut and say, stop, halt? Does he sit in the halls of Congress or some obscure state attorney general's office? Who is to recruit him to the cause, and who will pay his way? When he's found and takes the job and does it, that's us, guys, he will never be forgotten, for he will have brought the American people more financial independence and self-respect than 100 years of Social Security. Guys, that's a call for us. We got a call to arms. We have a responsibility.
That's what Art Williams did.
That's what we do still today, as we decide, are we going to get into this? Are we going to go in attack mode and go see everybody we know?
1963.
Yep. 89.
What's Wrong with Your Life Insurance? That's a follow-up book. Or is
That's
that
a follow-up. Best-selling classic. It was the lid off the life insurance.
Yep, I have that one.
Yeah?
Yeah.
Shall we read all that?
No, it just says buy term, invest the difference. Don't get it caught up in the crap that's being sold.
But you know what?
Go back. It's talking about Millico.
Yeah. It does highlight. It does highlight Primerica, right? I mean, back when it was A.L. Williams and
exactly.
So there's a whole excerpt about our company.
Exactly.
Yeah, didn't start selling. You can, start selling life insurance if you go back. It's just the foundation of the company.
Yeah.
Until the 80s, And then it says, in addition, Millico's 87 sales were more than double the second place in sales company of New York Life. The company got up to like 250,000 licensed people during that period of time. A.L. Williams was running the show. We were on a tear, man. And then Citigroup kind of messed it up, and we got cut down in size.
But I think we're over 150,000 now. So
Yeah,
we're getting
back
back
on the charge.
I'll end this chapter by simply urging that if someone recommends you to recommends to you the replacement of your existing insurance, he may well be right. Just make certain that the new policy is term insurance. That's the takeaway from
Yeah.
that. And that's our company's history. I would recommend that there's like a documentary about the company's history. It's like 30 minutes in length. It goes all the way back from the initial stages all the way through today.
Let me hit these last couple slides real quick, because I think the call to arms is this. If you click on this real quick, this is our concept: buy term, invest the difference, the theory of decreasing responsibility. If you click again, these 85 million baby boomers was the beginning. And if you watch, it'll scroll through the years. Okay. And these guys now today, it'll say like they're 50. What's their ages? It's 55, 55. And this is,
75.
so now it would be 60 to
Yeah.
80, the baby boomers. Hit the next one. Hit it again. And it's going to show the millennials, I think. Click the 72 million millennials. So click that again. And that means they're 30 to 50 today, 49, 30 to 49. So click it again. Now you got after the millennials, you got Gen Z. So Gen Z is not 4 to 24. Now they're 9 to 29. So we're getting into the Gen Z market, the millennial market, the baby boomer market. Our market's huge. The tsunami of younger generations continues, not including IGW transfer of assets. So guys, I don't know if there's anything else on these slides to hit, but I think just understand, and that this just shows the life insurance that's being sold today, it's growing in index universal life. That's where the growth has been. Term insurance has been flat because we're the only company marketing it, Hector.
Yeah.
We got to get back to the crusade. I think, is there any other clicks on here or anything else worth looking at? And then let's wrap, because we got an important weekend ahead of us. It's just saying, hey, there's a continuation of sales and index universal life. That's what's happening currently in the market. So bottom line, this is good. It's our responsibility to be responsible. It's our responsibility to carry the torch for what was started in 77. And it's our responsibility to do more appointments to spread the message. Because if we don't, nobody else is going to do it. It's our responsibility. And guys, 1977 to 2027 is our 50-year anniversary. You can unshare.
It's a cool.
You can unshare that. But guys, that's funny. It's our responsibility. If we don't do it, we got a 50-year anniversary coming up in summer after next.
Yeah.
Less than 2 years away. We're going to celebrate again how great this company has been and continues to be. And it's a matter of getting your piece of the action of saving people's lives, man. Because if we don't do it, there's not another company coming out there. If we don't do it, there's probably not another person. You have these micro, markets. All of us have them. What's a micro market? You take your cell phone, Facebook, Instagram, everything, and the people around you. I'd call that a micro market. And then there's a market of those people around those people. If it's not you, who's going to do it in that micro market? Because it's certainly not going to be your congressman. It's not going to be your senators that are going to solve the problem. They've stepped away. The McLaren-Ferguson Act isn't probably going to be attacked again. So now it's not regulated. So, and I see it time and time again. People in our business selling this crap, they go somewhere else. And then they drop their investment license because that's regulated. And then they just sell this crap. And that's why we want to get you fully licensed. You got to get fully licensed. Decide to become an advisor. Decide to get all your licenses so you can do the right thing for the consumer, and you can step back and go, you know what? I don't like life insurance. I don't like the industry. Hell, I don't even like paying my own premiums. Excuse my language. I don't like paying it because why? It gets expensive, and the beneficiary, but I also don't like the world without it. Does that make sense? I love my family, so I pay it. It's like auto insurance. I pay it because I don't want to be in a bad situation. So it's just part of living in a civilized society. So understand that and don't get caught up in overpaying. Put your extra money in the right places, Roth IRAs, emergency funds. And our responsibility is to go get our micro markets and get out there and go talk to people. Let me show you what we do, and then do a deep dive, get them to do an F&A, and yeah, and then help them out. Guys, next Saturday, we're in person. We're in Owings Mills, Maryland. 9 o'clock in the morning. I'm going to ask the leadership to change the schedule around a little bit. I'm going to try to kick it off with the F&A to start with, and have Ace do the recruiting interview, then Deepak do the securities instead of Ace doing the recruiting interview, because I just found out I got to be at a wedding that afternoon. I didn't know, and my wife just told me, so I was like, oh, crap. So
it's 9, not 10.
9 o'clock we can kick off. Yeah. So very important next Saturday, because it's the boot camp. We're going to soup to nuts, everything you got to know in the business. I hope today helped. Hector, awesome job. Next Saturday in person, Tuesday night business overview. Last day of the month is Tuesday night. This weekend, I'm going to challenge everybody that's on here. Labor Day weekend is the weekend for employees to take off.
You don't want me to do it, Gordon?
John is going to take it away.
All right, so we have an amazing weekend ahead of us, and it's Labor Day weekend, and for most people it's the last hurrah time for summer, cookouts, relax. But for us, it's time for us to turn up the heat, right? Because now is the time where most people who have jobs and work for jobs, they're going to be off. And guess what that means? Good news for us. They're home. They can answer their phone. They're available during the day, okay? So now's the time where if your month is not where you think it should be, and for most of us, when we look around, it is not there, right? The time is now for us to work. So Gordon asked me to share just really briefly a little bit, and I promise we won't be long, but just a little bit of the deserving jar with Miguel Ilyich. And what that really means, because for some of us, we think that showing up to a training is that's the bee's knees. We did our work for today. For some people, they think that, oh, if I called one person, I did some work today, right? Well, what is really required to win, and are you really going to do what's required to win? So I'm going to share with you really briefly what Miguel Ilyich says about that, and then kind of challenge you over this 3-day weekend to actually get after something, right? All that information we heard, people are being taken advantage of. People are, in Verms, there's a bunch of people who market permanent life insurance, talking to people each and every day, all day long, and we are quiet. How does that work?
Who is Miguel Ilyich?
Miguel Ilyich is he's $1 million earner in our company, right? $4 million earner in our company. And he wasn't always in finance. He didn't start out in finance, but it's really about how bad do you want it, right? So let's listen just briefly to what he says is the importance of not taking days off, all right?
I said no days off. So no days off, I wanted to pay attention to that. Look at that in my picture, in my video. Look at the video. Look at my video. It says no days off. I have it in my background because that's my motto. My car says no days off. Because, why? Because you build your life one day at a time. That thing, remember? Oh yeah, but God took a day off when he worked on the week of developing the world, the universe. He created worlds, created oceans, mountains, volcanoes, people, animals, whales, everything. What have you created in the last 6 days to take a day off? I went to work and you want a day off? You have to earn it. You want a great life? You have to earn it, because everybody wants to have the life, but nobody wants to pay the price. Yeah. And everybody has to pay a price. And what is the price that I decided to pay? I say no days off. I'm not gonna take off. No weekends, no holidays, no birthdays, no nothing until my dream is completed. First one. Second, parties on hold. No more parties. I'm not gonna go out more parties. Why? Because one time I was in a meeting and Omar Opeza said, "Do you know why Willie Naranjo and Lorena makes more money than all of you combined?" I was like, "No, I don't know." And he said, "Okay, because Willie and Lorena on a Friday night are working while you're all celebrating that you broke." I said, "Oh my God, he told me." You know why? Because on Fridays, I used to think that on Fridays were to go out and get drunk, to drink, have some good times. And then I was like, "Willie, how can you be working on a Friday night?" He said, "Why not?" I said, "Willie, everybody goes out on a Friday night." He says, "Not everybody, because I don't go out on a Friday night. I go out to work. I have a goal." I said, "Willie, when do you drink then?" He said, "I don't drink." "What? You don't drink? Are you okay? You don't drink? Everybody drinks." He said, "No, not everybody drinks. I don't drink." He said, "Miguel, did you come last Saturday to the training?" I was like, "No way, Willie. I said that training is at 8 a.m. in the morning." He said, "Exactly. You know why you didn't come on Saturday?" He said, "Wait, because I went out on a Friday night." He said, "Exactly. You wasted your Friday night and you wasted your Saturday." I was like, "Yeah, but isn't that what everybody does?" Yes. He said, "Yeah, that's what everybody that is broke does." That people that wants to do something different with their lives, they don't follow the same pattern of the other people.
That's right.
And I'm one of those. If you want to have my life, you do the same thing that I do, and you're going to have it. I was like, "Do I have to stop drinking to have your life? Do I have to?" And he said, "Well, you don't have to, but I recommend it." And then
all right, so I'm going to leave it there. I will put the entire video in our Telegram if you would like to watch it.
Yes, thank you.
On building a business. And one of the things that he does, and most of us know, is that Miguel, with his no days off philosophy, he has this concept called the deserving jar. And what he believes is not that you get what you want in life, but you really get what you deserve. Okay. And the question is, do you deserve to win? Have you done what's necessary to win? Right. So Miguel's philosophy is that every single day, you are to do one of these things before your head hits the pillow, right? You're going to either do 3 presentations, you're going to get someone involved in your business, you're going to help a family. I'm sorry, I had that twice. You're going to get a license, is what the other one is supposed to be. Or you're going to get 10 new numbers. If you don't do any of that, your punishment is going to talk to 10 strangers and getting 10 new numbers, right? But let's imagine that instead of doing it in a day, we have a 3-day weekend because we don't have a meeting on Monday. I don't know if Gordon mentioned that. We're not going to do our Monday morning meeting. And so you have Saturday, you have Sunday, you have all day Monday. 3 days. Can you do one of these things? In these 3 days, can you do the 3 presentations? In these 3 days, can you get 1 new person involved in your business? In these 3 days, can you help a family? There's so many people, we just talked about the Crusade, that are being taken advantage of. And trust and believe that some of these cookouts, somebody's going to be talking somebody out of some money. They're going to be telling them to be their own bank, invest in IUL, all kinds of things. You don't have to dispute it there. You get their number. Call them. Monday, they're off. Okay? Right? Or if you don't do any of that, can you get 10 new numbers over this weekend? So we're going to be lighting our Telegram up this weekend with activity. We're going to see on Monday, on Tuesday, when we get back on, which team has the most momentum going into September, right? Which team got the most papers in their deserving jar over the weekend, right? So if you did any success over the weekend, we want to hear about it. Even if it's you went out and you talked to one person, write it in the chat. We want to, in the Telegram, we want to hear about it. If you talk to a family presentation, put it in the chat. We want to hear about it. If you helped a family, did a recruiting interview, whatever you did this weekend, we want to hear about it. Because remember, as business owners, we don't take the day off. We go, go, go. Because it's not just about our families, but it's about the families that we are serving and the wrongs of the industry. Okay? Thank you.
Have a great day, guys. Thank you, Shonda.
Great
Thank
job,
you,
Gordon.
Hector.
Thank you, guys. Thank you,
Thank you,
Sean.
guys.